Celsius stock is starting to make a big move again ever since its decline from its earnings release, and we have now hit the resistance. Can we expect it to break through this resistance? Is there enough intrinsic growth for this stock yet to come, or have we already surpassed this? In this video, I'm going to be answering all of this and telling you exactly why this stock has surged up in recent times. I do not use an ad blocker, yet TradingView likes to terrorize me and ask me to use an ad blocker. Annoying. So recently Celsius wants to sell more energy drinks to women. Wall Street likes the move. In this article here we can see that Celsius has actually acquired a competitor here. So Celsius has decided to buy energy drink maker ALINI NU for $1.8 billion in a bid to boost its appeal to women. ALINI NU's sales have doubled in 2024 and continue to grow year over year with a rate of more than 50%. And in other news, I have now actually seen Celsius in the UK, which is a really good sign for this company. It shows that they have now actually fully expanded into European markets. I saw it in their Tesco's, and if you are American, that's kind of our Target equivalent in a way. I will put the video here now. You can see the stock. Of course, we don't really know when the stock was changed and everything, but it is actually selling more so than its competitors, depending on, of course, when the stock was taken. So I'm in Tesco's. The first time I've seen Celsius. It's in the meal deal in Tesco. It's interesting because someone's obviously had a couple, but looking at the competition, it looks like they're not actually selling, apart from the white monsters, which seem to always sell anyway, but that's fully snagged. Of course, I don't know when these will last changed. Look at the prices there, they're all marketed the same, but obviously Celsius is obviously new to the UK, that's the first time I've seen it. Right, well, looking in the multi-pack bit, we still don't have Celsius in multi-packs here in the UK, which that's something in which is probably going to end up coming to market sooner rather than later. Now we actually have it here. It's interesting to see that we don't have it at all in multi-packs, just in the cold section at the moment. But yeah, that is really positive for Celsius, and obviously that is going to drive up sales in the next couple of quarters with it now expanding. So what can we see for their financials? Are they actually strong? Well, looking on my system here on the liquidity, this is really strong, with Celsius having a liquidity ratio way above the hundreds. Typically, this stock has the best liquidity ratio in which I've seen ever. It always has done, and this is probably where it's used, what it's used to buy their acquisition on Friday, as they just have a significant amount of spare cash. On a retention rate here, we can see that in the last quarter they did actually not take profit. However, typically they are taking profit, but it is actually starting to look like it's somewhat declining, but that could be due to the fact that it is trying to merge into other markets, essentially. And on a free cash flow basis here, we can see that they are doing really well, with the free cash flow somewhat increasing. But of course, with the liquidity ratio being so good, I'm not too concerned by this company's free cash flow on a quarterly basis. And we can see here on a 365-day exponential chart, both volume and price, we can see that the volume has actually increased, but the price is decreasing consistently. Of course, this stock was massively overvalued at $95 around May last year, and it is looking to be as if it might be starting to form a bowl effect, but we'll get on to why I don't think it is later on in this video. Looking at the 91-day exponential chart, we can see that volume is nicely correlating with the price, suggesting that this price is actually supported. However, now this company does have a PE of 73, which is actually massive. I can't really recommend getting into Celsius at this PE, especially as when we come down here to look at the intrinsic value, I have this stock to be really quite overvalued now, which is a bit of a shame because previously I didn't, and the valuation has actually gotten significantly worse now. If I can just figure out how I can move my mouse properly here. So On the left here, bullish chart, we can see that the intrinsic value is set at $25. What is happening today? Everything is jumping around. So it's set at $25 here on the intrinsic value, and with the current price being at 32, that obviously puts this stock at a overvalued territory, and on the right bearish, it's set at 13, therefore meaning it's overvalued again. If we go in the middle of these, we get a mean of 19.6. On Peter Lynch's valuation here, we can see that Celsius is also looking very overvalued, with it giving a result of 0.3, so I would bump that up to 0.7. I don't think it's massively overvalued. I think it is currently fairly valued despite the intrinsic value. And if we go down here, we can see that the discounted free cash flow results yield a result of being overvalued this year. And on a 3-year basis, we can see that this stock should be worth $44 and $133 in 9 years' time, based off of the free cash flow growth. So when we take a look at the probability theory for this stock, we can see that the probability of a positive day based off of the last year is only 41%. The probability of a negative day is 45 result, and a neutral day is at 14%. But of course, we have obviously seen this price fall down quite significantly in the last year, so that could definitely be the reason for this, as the stock was overvalued. So is it safe to go off the probability theory for this? Well, of course it is. It's definitely a metric to consider, but it might not have as much influence as you may originally think. But it's definitely something to keep in mind, as it will definitely provide somewhat of a foundation for a position in this stock. I think one thing to note with those intrinsic value formulas is it's obviously not accounting for actual growth for the next couple of years that is unaccounted for. Like, for example, this new merger, it won't account for this at all. And I don't really think it will account for the European growth as well as you may think, just because, nobody really knows how Celsius will actually perform in Europe. Personally, I think it will perform very well, as Europe is quite a health-orientated continent. So the people of Europe will be very happy to have a healthier option rather than Monster, Rockstar or Red Bull. If I fudge the numbers a bit here and put the growth rate to 30% instead of, I think it was set at 24, we can see that we are actually now in a buy, well, it's still a sell position with a margin of safety of 25%, but the intrinsic value on the left here is set at $34. So it could still mean that this stock does look massively overvalued, because a 30% increase on this year's profits is quite unlikely. But I do think the original intrinsic value didn't account for as much growth as I would like it to. And when we head over to what the analysts are thinking for this stock, we have 7 putting this at a strong buy, 7 at a buy, 6 at a hold, and 1 at a sell. So the general consensus is this stock is a good stock to be holding right now, and I do think it is, despite the intrinsic value. I do think this stock still will go up, but I do think it's one to kind of approach with a bit of caution. It'll be very interesting to see if we do manage to break through this resistance here, and of course there isn't actually a level of support at all on this indicator, so it's something that I would definitely put stop losses in. I think it could be quite a volatile position to be buying into, but it could definitely be one that could start to grow quite exponentially in the next year or 2 or 5. I think long term this stock will do absolutely great, especially as it's expanding to different markets. But right now, I think it's fairly valued. I don't see it climbing up too much further than this, but never say never. There's always a chance with these sorts of stocks, especially when they're making moves like the acquisitions of competitors focusing on women's drinks, just bringing in a wider market. But now I do think about it, why is there a women's drink? What is the actual difference? I ain't got a clue.
So overall, very positive outlook for Celsius. I do think this is the upper limit of this stock, but there could be more potential. I'm not a financial advisor. None of this is, of course, financial advice. I've just realized I've had a coffee here this whole time that I completely forgot about and is now cold. So that is brilliant. Again, I hope you have enjoyed. If you have, please do hit the like and subscribe. It would be greatly appreciated, and I will see you for the next video.